This is Michael Gentilella. It's Wednesday morning. Looking at the Australian dollar USD here on a weekly level. It's an above the trees view. Obviously, nothing is actionable in terms of trade triggers or anything like that at this level because each wick, as you can see here, is a weekly wick. So 4 wicks equal essentially a full trading month. So one wick. Yeah, one thing that is telling us, if you look at the very end here, is just as a quick note, that little tail that's forming is showing that on a weekly basis that bears took over, created a local low or a temporary low, which created a wick or a body down here, and then essentially before the week closed, which it hasn't closed obviously yet, there was obviously a sell-off, and then the Australian dollar USD bulls came back and started eating away at the wick. So either some new piece of information came out, and or technicals were noticed, and I think it's a combination of two, that they noticed certain technical indicators and combined with certain pieces of news came out that forced them to act in a certain way. So what we're seeing here is a small wick, and I'll tell you at above the trees level why I feel that that's the situation, why that's happening. So if we zoom out here on Australian dollar, I noticed something when I zoom way out. This is a very above the trees view. If I zoom over, you'll notice that there's this long trend line here. It's a huge trend line going back to 2002. So in some other videos, I was bullish, the dollar, which I have to go and look at my analysis to see how that's playing out. It seems that the Australian dollar might be heading towards a possible increase, at least over the short term, because this is a very hard level to break. It is a very, very, very historical level if you're looking at this trend line. As you can see, when I threw some Fibonacci's on, going from this level of about, it's around 0.60 psychological support level, up to the top here, which is about 1.11. And as you can see, we're at what they call the Fibonacci line in the sand. Fibonacci ratios are broken down into the 23.6, 38.2, 50%, which is not a true Fibonacci level in the sequence if you're to basically go back to the theory of Fibonacci's numbers, 0.618, and then 0.764, which is the line in the sand. Anything that closes below that is considered a technical reversal. Now, as you can see, there's a confluence very, very close to those two levels there. So you could bet that traders are noticing this. And what's probably happened is, and you can't consider this a technical reversal until there's candles that are closing below it, preferably at least one or two candles actually closing below these levels. So the full bodies and wicks being below these lines. So right now it pierced through and then is being obeyed at this level. So I would, at this point in time, based on just this chart, would not short the Australian dollar USD. I would actually be positioning for some corrective action. And here's another thing that adds to that. I did a quick Elliott wave count on just this extension here, and we have one. And I'll explain this right now why I had to make this count. This was the end of a correction, I believe. And if we take this down, we have one, and then we have little interim corrections in here. But we basically have this is if I assume that this is a wave 1 here, and then I come back and I go, okay, wave 2, wave 3, wave 4, that can't be, because wave 3 by Elliott's rules, he has a couple simple rules. Wave 3 can never be the shortest. Therefore, that's invalidated, and this becomes an ABC correction. And as part of the ABC correction, wave 2 is created. And then we have wave 3, which actually has a 5-3 pattern within it, and then a wave 4, and then a wave 5, which is stopping right there. So I believe that these are 3 indicators above the trees that are truly indicating that we're about to hit a bullish rally or correction in Australian dollar USD at the weekly level. Watch my next videos for lower time frames. I'm going to look at the daily, and then some intraday, and possibly some 15-minute and 10-minute, or 15-minute and 30-minute candles to see if there's anything actionable. Other than that, thank you.